Once the darling of the tech industry, Tesla has fallen from grace. 2022 was a tough year for many tech companies, but few fared worse than Tesla. The stock is down 69%, and despite his immature humor around share prices, I'm sure Elon isn't laughing this time.
Oh my God. A lot of weird forces at odds with each other.
Compared to other car makers, Tesla is the biggest loser there too. Despite heavy losses across the industry, other leaders like Ford and General Motors only posted losses in the 40% range in 2022. So what gives? What happened that caused such a fall from a company that was once seen as untouchable? Now, it doesn't take a brain surgeon to see the link between Elon Musk, the actions he's taken over the past year to acquire a social media company, and the resulting share price of Tesla. But the details are interesting, and I really love ragging on Elon Musk. After all, the guy has been playing God with the stock and crypto markets for years now. So let's take a moment to talk about Tesla, and why the company is in dire straits. First off, while Tesla has taken an absolute beating this year, it's important to remember that the stock was completely overvalued to begin with. In 2020, the stock price rose 800% in value, and in 2021, it rose an additional 50%. This brought Tesla's price-to-earnings ratio to 190, which is extremely high. For the uninitiated, a price-to-earnings ratio really just compares the price of the stock with the earnings of the company, and a lower price-to-earnings ratio is generally desired. A PE ratio of 20 to 25 is the average, with ratios lower than that being considered value plays. Obviously, with a ratio of 190, Tesla seemed overhyped at the end of 2021. So why exactly was Tesla as hyped as it was? Vox reports that this is a classic example of a disruption fetish. If you look at companies that have gone public in the last couple decades, you'll find that some of the most stratospherically successful ones were considered disruptors, meaning that they took an existing industry and turned it on its head. They went after the old guard and beat them. As an example, Netflix was a disruptor in the DVD rental industry by first providing rentals by mail and then by starting a streaming service. They almost single-handedly caused Blockbuster's demise. Tesla fits the bill of a disruptor quite well. They seek to change the way Americans travel. Instead of using gas-guzzling traditional cars, they want to provide luxurious self-driving electric vehicles. While not exactly a completely novel idea, it was refreshing to see a company dive headfirst into the concept. They also took advantage of an important issue of our time, climate change. So not only were they disrupting a stagnant industry, they were also doing important work for the survival of the planet. Now that's a David and Goliath story if I've ever heard one. But that's not the only reason they were so massively successful. Their leader, Elon Musk, was enigmatic. He had a long history of successful business ventures, and he seemed larger than life. Every day we were hearing news about how one of his businesses was changing the entire game in its industry. Elon was the king of disruption, and his fans ate it up. The army of Elon worshippers took to social media, and waves of pro-Tesla propaganda flooded Instagram, Twitter, Facebook, you name it. Who needs a marketing team when you've got the world on your side already? Elon's success in 2021 was so profound that he was even named Time's Person of the Year. It seemed like nothing could bring the CEO back down to earth. That is, until he started doing one of his favorite pastimes again, manipulating the stock market. In January of 2022, Musk started buying up shares of Twitter. So many shares that he actually became the largest shareholder in the entire company, owning 9%. In an SEC filing, he disclosed his stake in the company, which naturally caused the stock price to rise 21% in the few days after. Shortly thereafter, it was released that Musk had filed an offer to purchase the company with the SEC. The board of Twitter originally thought it was a joke. After all, the share price he submitted was listed as $54.20, which contains the number 420, a well-known pot reference which Musk has enjoyed previously. Additionally, his financing documents were submitted on April 20th, aka 420. Was Elon just trolling the board, or was he serious? Over the coming weeks, it proved that he was quite serious about the offer, but quickly the deal started to turn sour. Musk started to back out of the deal, stating that the board could not provide the due diligence about the company's percentage of spam accounts. This is when I started paying close attention, because I've seen this type of behavior from Musk before. This is just my opinion, but I believe that Musk never intended to purchase Twitter. His intention was always just to increase the share price with a fake buyout opportunity, which he could then use to sell his stake at a massive profit. This is all conjecture, but the fast about face of his actions definitely raised my suspicions. Eventually, he agreed to buy Twitter so that he could avoid a lengthy legal battle, but the damage had already been done. Elon's final purchase price of Twitter amounted to over $44 billion. How did Elon finance this purchase? Sure, he took out a few loans from major banks, but he also fronted a significant portion of the cash himself, $20 billion, which would come from the sale of, you guessed it, Tesla stock. The market did not like this idea at all. After Twitter's board accepted the bid on April 25th, Tesla stock dipped 12%, losing nearly $125 billion in market cap. The market expected a drop due to Musk publicly stating that he would sell off shares to fund the purchase. And the market was right. Within 3 days, Musk had sold off $8.5 billion worth of Tesla stock. This was just the beginning of the woes that would befall Tesla over the rest of the year. Over the next 3 months, there would be many back and forth issues on the acquisition, and Musk even tried to get out of the deal. He tried to put the deal on hold, and then he tried to back out completely, indicating a bad case of buyer's remorse. His reputation was starting to take a hit. People were starting to call him out for market manipulation as Twitter's stock price suffered during this period of uncertainty. One Twitter investor even started a class action lawsuit against Musk for market manipulation. A legal battle started to ensue between Musk and Twitter. During this time, Musk sold an additional $6.9 billion of Tesla stock, in case he lost his legal battle and was forced to purchase the company. The funny thing is, during this time when Musk was attempting to back out of the deal, Tesla stock rebounded. It seemed that despite him selling additional shares, it actually had little effect on the share price. I think this is because of optics. Tesla investors viewed Musk's desire to purchase Twitter as a distraction, which instilled fear. If Musk's attention were split between Twitter and Tesla, it would mean he wouldn't be giving Tesla the full attention it deserves. Eventually, just mere days before his scheduled deposition in the legal battle, Musk decided to honor his original purchase price. The timing was a bit too suspect for me. What did he have to hide that he didn't want to give his deposition? Eventually, the deal with Twitter closed, and Musk became the owner. I'm sure he breathed a sigh of relief, thinking that this debacle would soon be behind him. But unfortunately for him, Tesla stock had other ideas. The shareholders' fears had been realized. The slew of news articles that flooded the market about the acquisition inspired fear, which caused a downward spiral for the stock. Not only that, but as Q4 rolled around, it became clear that Tesla would miss its revenue growth targets for the year. Their target was 50% year-over-year growth, but they only managed 40%. And they missed 15,000 car deliveries in Q4 as well. Investors wondered, would things have gone differently if the CEO hadn't been splitting his attention? Obviously, a big factor in all of this is a recession that has been looming over Americans' heads for years. Now, with layoffs happening and general belt tightening across the board, people have less money to spend on luxury items like electric cars. There's also more competition in the market than ever, with competitors like General Motors, Ford, and Rivian eating into their sales. In reality, the debacle with Twitter isn't the only factor that's hurting Tesla right now, but I do think it's one of the main reasons investors have shifted their view on the company. Sure, competition and not meeting expectations are usually enough to cause some drop in a company's stock price, but the dramatic shift in excitement from investors is something else entirely. I think that investors finally saw Musk for who he truly is. He isn't a god. He's just a man, one who delights in 420 cannabis jokes and makes stupid mistakes with his money. The sentiment around Musk is that everyone is just kind of sick of him. The saying that all press is good press is just not true. I think that too much press is bad press. And if there's one thing that Musk has had plenty of in 2022, it's press. I'm happy that the market has come back to earth on Tesla. It is a great company with a lot of potential, but the hype around it in 2020 and 2021 was simply unsustainable, and frankly, pretty crazy. As for Musk, I hope this experience was humbling for him. It's amazing how quickly you can go from the hero to the villain in the public eye.